Thank you, Mr. Chair. In late July 2022, FEMA released a concerning draft proposal called Direct to Customer. In its release, FEMA noted that it is imperative that FEMA enable the digital sale and servicing of flood insurance to increase the number of people covered. FEMA noted that this is a long-term project and stressed that they are in early stages of looking at the concept and just beginning to ask questions about it. Despite the need for more flood insurance awareness, insurance agents and brokers, whether selling to NFIP or via a private insurer, play an important role in informing the consumer's purchase decisions. In this digital age, there's often a rush to cut corners under the erroneous notion that an automated process can replace human interaction and expertise. Any kind of proposal that undercuts the valuable and trusted role that independent insurance agents and brokers play in this process could have a negative impact on increasing flood insurance participation rates. We saw this actually play out in the EIDL loans offered directly by the Small Business Administration during the pandemic. I was a member of the Small Business Committee in the 117th Congress. We had a much higher incident of fraud related to the PPP loans issued through the SBA than we did through the financial institutions that did the underwriting on them. So to Mr. Hendrick, do you think the direct-to-customer approach to distributing flood insurance would reach consumers that the NFIP or agents are not currently reaching?
Thank you for your question, Congressman, and no, I do not. Since I entered the insurance industry over 30 years ago, direct-to-consumer approaches have been tried over and over again, and most have failed. In fact, over this time, the market share of independent insurance agents has remained stable or it's grown. And we've talked about education earlier, and if we agree that education is essential to increasing the number of U.S. households insured for the peril of flood, then it's even more important that independent agents who live in and have local knowledge in local communities remain in the process so they can refer to the local creek, the local lake, the pond, the levee nearby, the hill that are specific to flood risk in a particular area. And agents also play a critical role in servicing those policies after they're written. When mortgages are paid off, retaining those policies is just as important as writing new ones. We don't believe that a call center representative or a website would be effective in conveying this information. And one other point that I would add is some of the communities that we talked about earlier that are disadvantaged may not have the same access to computers and internet that other communities have. So there again, the role of the independent agent, a face-to-face relationship would be more important in increasing the take-up rate on flood insurance.
I mean, it seems from the conversations that have been happening that the biggest obstacle is to more private flood insurance is the subsidies in the NFIP. And the subsidies have contributed to over $20 billion in debt to the NFIP as well. And unfortunately, I think that's what's putting a lot of these properties in harm's way. Mr. Small, many of these plans are currently being phased out by FEMA, but how can Congress address the subsidies and bring more private plans into the market to protect taxpayers?
Well, I certainly think there's room for improvement in new private market to come into the market. Obviously, it's a delicate balance trying to, again, get the insurance component right and then figuring out the subsidy maybe to pay the premium, but you've got to get the premium correct if you want a sustainable program. And maybe, you know, we've been on a 50-year journey on the NFIP. In the last couple of years, some really great tools have been introduced. And I think we're still in the infancy in the private market to figure out what that's going to look like over time, but it looks very promising to me to have that. So I think we need to, take this forward, certainly make sure we've got our extensions in place, continue the good work that Risk Rating 2.0 has provided, and build upon that. So I think we're still early. I wouldn't say it's a reset. It's just taken us a while to get here, and here we are. But definitely out of the 4.7 million policyholders, there's that's not even the tip of the iceberg.
Last month, reports indicated that NFIP's traditional reinsurance placement faced a 36% decline in participants from the previous year. Mr. Enoise, what can Congress do to encourage more participation and further protect the taxpayers? I know you have had this question multiple times today. So,
Congressman, thank you. I think the reduction that you refer to is simply a function of the market. all areas of insurance suffered that kind of retrenchment. In terms of encouraging greater take-up, I think we've touched on a lot of those things. One thing that perhaps hasn't been mentioned is the idea that
The gentleman's time has expired.